For your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton. Emily Parker is on break, and then there were two Lawrence.
Yeah, by the way, I'm obsessing with that background of yours. Is that Ontario?
The hills are alive. Switzerland. Checking in on Bitcoin, the CoinDesk Bitcoin price XVX index is currently trading at $46,950 or so. Bitcoin is in retreat, almost 4% over the past 24 hours. And the CoinDesk Ether price ETX index is at $3,809. ETH also sliding down 6.6% over the past 24 hours. The new DFX CoinDesk DeFi index is at 387 points. DeFi taking a hit about 3.6%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk branch as a globally as leader in crypto news, events, and data. Grüezi to all my fellow Swiss out there. But looking at the markets, Lawrence, seeing a sea of red heading into the weekend.
Yeah, you could hide your crypto in Switzerland, I suppose, if you really want to get safe. It's a sea of red. As you were saying, there's nothing happening on the upside, at least going into this weekend. You have a couple of things happening, and as you know, I don't like to attribute macroeconomic stories to Bitcoin. However, it does look like, at least for the time being, that the stimulus bill in Congress is kind of on DOA, or at least not happening anytime soon. Thanks in part, we have 52 senators who are not exactly thrilled with this. So the idea of this extra spending happening in the economy right now at a time to counter the Fed's tapering of its stimulus doesn't seem to be happening. So that kind of brings about this idea of low inflation, or not as high inflation going forward or over the next few months as initially anticipated based on the data. So that might have maybe sort of possibly play into Bitcoin's price.
Are you saying the Fed may have something to do with this? The central banks around the world?
Okay. Sort of, but no. Sort of, but no. Let's right. A little bit. Well, like anything else. Butterflies flapping its wing in China also has an effect on Bitcoin. Maybe not as much as the Fed, but, they're kind of close to neck and neck.
All right. Let's dive further with our CoinDesk
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Joining us now to discuss the crypto markets is Fred Pye, CEO of Canadian crypto fund manager 3iQ Digital Assets. Good morning, Fred. Thanks for joining us. So, what's your Bitcoin outlook, or the crypto markets outlook, amid central banks around the world, the Federal Reserve, the European Central Bank, the Bank of England, tapering pandemic-era stimulus?
Well, good morning, Christine, and certainly hi to you, Lawrence. Good to see you both again. This has been really quite an interesting week, because sort of what you were following off what you were saying there, Lawrence, inflation here is inflation not here. But we have a whole new generation that's looking at inflation that was, kind of 6-7% going, 6-7%. Wait till it really starts to take off. And I think this next generation is going to realize that inflation will have an impact. But what was interesting to see is this kind of battle between the risk on and risk off Bitcoin holders, right? So a couple of things that we look at very closely is, is inflation good for Bitcoin or bad for Bitcoin? Well, we know that printing money is good for Bitcoin because that's a risk on asset. So as long as the Fed starts printing money, but when the Fed says, well, we're not going to print any more money, we're going to start tightening in 2022, we've announced three rate hikes. And I think the FOMC meetings this week just basically told us what the market had already priced in. But if they start raising rates, what we're seeing is the institutions coming to us saying, look, we are looking for that inflation hedge. So we are the risk-off buyers of Bitcoin, the store of wealth buyers of Bitcoin. So you have this battle between is it a risk asset or is it the risk-off asset going on? And I love watching this battle because it gives us a great range.
Do you think the leg lower is already priced in, or there's still room to go lower considering all this tapering happening?
Yeah, I definitely think that we're going to have range. We're definitely range bound, but the amount of buying that comes in, again, I don't know if you saw the stats this week, retail buying peaked up as soon as we got back down to 45, 46 again, and it, spiked up again and brought us back to 49. What we do know is the supply is getting tighter and tighter and tighter. There are a lot of, just based on our business and the number of quotations we're going out and doing and talking to people about, some of their first investments in Bitcoin. And these are institutional, purchasers of Bitcoin. But when Bitcoin was up at 60, everybody goes, "Oh, we're not ready yet." But when we get back under 50, the phones start ringing, people start calling and say, "Hey, we're ready to start looking at this. Is a good time to get in."
Fred, I have to jump in for a second because one thing you said that as rates go up, that you'll see this sort of risk, that you'll see sort of a risk on worry about inflation and what have you. It almost sounds a little bit Turkish, right? That's kind of what Erdogan's saying in Turkey. Hey, if you raise rates, you're going to create an inflation. Or do you think that that's really going to be a signal that, hey, the markets are probably underestimating or misunderestimating the role of inflation in prices, that inflation is actually worse than perhaps the average person is led to believe, and that's why rates have to go up, and so they're going to freak out and buy Bitcoin?
Well, Lawrence, in some of our research, and this is going to shock a lot of people, take out crypto as the risk assets. Let's talk about some of the other risk assets like the markets and things like that. Do you understand in the last 2 years, your price of gas has gone up way higher than the risk assets you're investing? The price of used cars have gone up way greater than the risk assets that you're investing in. Your groceries have been to the grocery, like easily your grocery bills are way higher than the best risk assets that you have. And your utilities even, and your cell phone bills and the stuff that I'm paying for, it's nuts right now. And so what we've seen is huge movement in inflation underlying, but it's only posting a 6 or 7% number yet. But I think it's a lot greater than that. So what we've seen is two things. Is I do believe that Bitcoin next bull rally will be completely created over the chase for the store of wealth. Okay, I think the decades of risk assets of endless printing of money is definitely starting to peak in, and we are going to hit an inflection point. What we will have also seen, which is very important, is the movement of the other crypto assets, the other digital assets, the other blockchains that are actually coming into a maturity right now. Like Bitcoin's domination is down significantly. But if you take a look at what, the Algorands, the Avalanche, the Cardanos, the Polkadots, the Solaras, the Stellars, the Tetals, the Polygons, like all of these blockchains that are working in either DeFi or NFTs or the Metaverse, it's a whole new generation. And those early adopters of Bitcoin and Ether are now ready to move on to this next level. And we've seen a reduction of the domination of Bitcoin and Ether. And I think we're going to continue to see that. But the only one who will react positive to inflation will be Bitcoin.
So I want to ask you about this that notion, because obviously you have some ETFs involved in ETH, and you have Bitcoin, et cetera. So how have they been trading, and who are the customers for each one? I mean, who's buying these ETH ETFs in Canada, and who's buying the Bitcoin ETF in Canada? Is it institutional? Is it individual investors? Like, what's the breakdown? Who's the demographic here buying this?
Yeah,
and how has it been going?
That's a really good question, Lawrence, and we're pretty sure it's significantly retail. And a couple of things. In Canada, you can invest in the ETFs that are on the Toronto Stock Exchange and put them in your retirement accounts and your tax-free savings accounts. We also list other funds around the world, and in other countries around the world, people are saying, well, why don't you just buy Bitcoin? Why would you buy an ETF? Well, they really don't want to have to deal with their wallets. They don't want to have to deal with their their keys, their private keys, and understand all of this. The ease and the confidence you can have in a prospectus-based ETF is extraordinary. But again, Canada, we've peaked at probably somewhere around $3.5–4 billion of these types of ETFs, which maybe, we've seen the demand fairly flat over the last few months. So the early adopters are in. Now, having said that, most of the Canadian chartered banks will not allow their investment advisors to buy even a Bitcoin ETF in their client portfolios. So it has not reached any kind of sizable adoption. And that would be the same in the US.
So what do you think is the reason why the SEC is so skittish about a Bitcoin ETF? I mean, as the only non-Canadian on this panel right now, what is it that the Canadian regulators know that the Americans don't, or vice versa? What is it the Americans know that the Canadians don't?
Well, first of all, the Canadian regulations, and it was 3IQ that worked with the regulators and, in fact, challenged them in a public hearing to talk about our processes for doing this. I understand that Gary Gensler says until the SEC control the entire pipeline of crypto or Bitcoin, his major concern is money laundering. In Canada, our regulations are that we have to be with a regulated financial institution for custody, which is ours is Gemini. We have to have a Canadian custodian. It has to be auditable, and only one trading desk. So it's our trading desk that buys all our Bitcoin from regulated trading desk platforms. We can cipher trace all of ours. So the OSC can come into our fund and check every single Bitcoin that we've bought. And that's a very big difference. You multiply that by 10 or 100 in the United States, and the policing would be, extraordinary. So I think, Canada is certainly leading the world now with our ETFs and our closed-end funds.
Right. He's concerned. Gary Gensler is concerned about market manipulation, yet he is okay with a futures Bitcoin ETF. I don't know how that market manipulation could somehow be completely eliminated if that's his concern in the Bitcoin market, but we'll see. I don't know if you have an answer to that.
I do, Christine, because market manipulation was one of the big challenges by the Ontario Securities Commission with us. We said, although you could find evidence of market manipulation potentially on exchanges in China and everything else, the regulated exchanges that we build our indexes off nobody's been able to prove any sort of market manipulation. So whether Bitcoin we would always call it the Bart Simpson chart pattern, or the upside down Bart Simpson chart pattern, where Bitcoin would go like this and then go across and then bounce back up. We could not prove, and the OSC could not prove that there was rampant speculation on the major exchange-traded Bitcoin products. And I think that people have to understand that some of these exchanges we're working with now, in Coinbase and everybody else, these are all regulated, solid institutional plays, and nobody's there to allow any kind of messiness or fooling around with. But again, if market participants come from all over the world, it could be tougher to police.
Fred, if you have a Marge Simpson chart pattern where the price moves dramatically up and then sideways for a little bit and then back down quickly, because of manipulation in other countries, such as China, such as some of these exchanges where we actually don't even know where the servers are, it creates a price distortion that affects ultimately Canadians owning ETFs and Americans who buy into it, for instance. So isn't that still a concern for regulators, that nonetheless they can't control that overseas aspect to it, and it does move the prices so much and so dramatically that it can't help but affect even the legitimate market prices found in regulated exchanges in North America?
Well, again, when you take a look at the ETFs that have been created, we all follow different index patterns, or we all have followed different indexes. And these indexes, a lot are time-weighted pricing. So our ETFs are all based off of, not one instantaneous spot price of any one exchange. And really the only, spot price that matters is the one at the end of the day. But having said that, it is understood that even certain stocks, stop losses will get taken out, leverage will be squeezed, and everything else like that. That's normal. Whether you're talking gold, oil, any other kind of commodity and or security. So they have to. Nobody was able to prove that it's that different on Bitcoin than anything else. Again, sticking to the 7 major exchanges that any of us would only be comfortable dealing in, and not secondary, third level exchanges in Asia or in East Bloc countries or anything along those lines. So we were very comfortable with our pricing. Our indexes are all created by MVIS, Vanex index company out of Europe. We worked very hard on building all the indexes. You're going to see a bunch more indexes come out, which will have products surrounding. And full disclosure, VanEck is a major shareholder of 3iQ, as is CoinShares. As you know, we're 3iQ CoinShares branded ETFs. Right. But yeah, we're all in this business to make it regulated, and the more regulated it is, the better it is for all of us.
All right, Fred. Maybe you should get Gary Gensler on the phone. Let him know a couple of points or two. All right, that was 3iQ Digital Asset CEO Fred Pye. Thanks for joining us. Coming up, checking in on Asia and how Web 2.0 will transition to Web 3.
Hi everyone, my name is Naomi Brockwell, creator of NBTV and co-host of The Hash, and you are watching CoinDesk TV.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Megha Chadha of Forecast News.
Welcome to the daily forecast, December 17th, 2021. I'm Megha Chadha of Forecast News, covering all things blockchain. Korea's Supreme Court has ruled an investor who spent Bitcoin mistakenly transferred to his wallet not guilty. We'll take a look at that case and a whole lot more coming right up. Let's kick off with some of the top stories out of Asia today. First up, a Japanese billionaire says he's minted the first NFT in space. Yusaku Mizawa, founder of Japan's largest online fashion retailer ZOZOTOWN, tweeted to say that he turned the first photo he took in space into an NFT. The Russian Soyuz MS-20 space flight he was on board was docking to the International Space Station. Meanwhile, XLD Finance has launched a project allowing users in Bangladesh, India, Indonesia, Malaysia, and the Philippines to use GameFi tokens or stablecoins to pay for necessities and utilities. Over in Korea, the Supreme Court has ruled an investor who used Bitcoin accidentally moved to their wallet not guilty. The lower court initially gave the investor 18 months for embezzlement and misappropriation, but that verdict has now been overturned. Forecast News' Danny Park takes up the case.
The South Korean investor received 200 bitcoins worth nearly $1.25 million back in 2018 from a perfect stranger in Greece who mistakenly transferred it to the wrong location. The investor then moved the bitcoin to 2 of his other accounts and liquidated 3 bitcoins which he personally used. The Supreme Court ruled the investor not guilty of both charges earlier this week, explaining that there is no regulatory basis to criminally punish the action for embezzlement or misappropriation, adding that it was nothing more than a civil debt between the two parties. One Korean lawyer shared his views on the ruling with Forecast News.
이런 논리 자체가 너무 도그마인 것 같아요. 너무 올드한 그 법적인 것들이 현재의 어떤 재산상의 상황을 포섭하지 못하고 있는 것 같고, 혼란만 가중되는 그런 문제가 있습니다. 그래서 증권으로 볼 거면 증권을 보고 그다음에 전자화폐 또는 나머지 것들은 기타 자산으로.
For Forecast News, I'm Danny Park.
The year is 1973. Bruce Springsteen's debut album has just been released. A few months later, Swift, a cross-border payment system, debuts. 40 years later, it continues to hold strong despite various drawbacks. Surely it's time for a new intermediator, or shall we say disintermediator, to take center stage. Adrian Brink of Anoma is here to talk about the need for a new wage transfer standard. Great to have you with us, Adrian.
Thank you for having me.
Adrian, has Swift outlived its utility? Could 2022 be the year Swift is swept away?
I think in 2022 we're going to start seeing that Swift will start being replaced by some of the newer technologies that have been developing in the last, let's say, 5 years or so. One of them, for example, being IBC, the Inter-Blockchain Communication Standard. I think Swift will be around for a long time to come because it's a legacy system, but I think it will slowly become irrelevant.
What would be the benefits offered by the new wage transfer system that could replace Swift? How do you see it being different and hopefully leagues ahead from a privacy standpoint?
There are a couple of different protocols currently in the works, but I think by far the furthest along is IBC or Inter-Blockchain Communication. There are a couple of really big advantages here. One is it's asset agnostic, as in you can use arbitrary assets with the system. Swift only works with very specific fiat currencies, whereas the modern systems like IBC just generally work with all assets. The other thing is it's instant. The modern systems, these things are just going to happen in an instant, and they are going to be in your account right now in 5 seconds. And I think the last point is privacy. Currently, Swift is completely non-private, and you hope that none of the participating institutions leak your data. But with the modern systems like IBC, we're really going to get privacy to end users.
Thanks so much for joining in, Adrian. And that's the daily forecast from our vantage point right here in Asia. From all of us at Forecast, happy holidays. I'm Megha Chadha. Until next time.
All right, checking in on Bitcoin right now. The CoinDesk Bitcoin price XVX index is falling back about 4.4% over the past 24 hours, trading at $46,652. The CoinDesk Ether price ETX index is also retreating over 7%, trading at $3,779. And the DFX CoinDesk's DeFi index is at 363 points. It is falling back about 4.6%.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Silicon Valley is often painted as a bastion of idealism and progressive liberalism, but our next guest offers a different take through the eyes of big tech's leading conservative, Peter Thiel, the multi-billionaire who co-founded PayPal and seeded Facebook, Airbnb, and Spotify. Joining us now is Max Chafkin, Bloomberg journalist and author of The Contrarian. Hello there, Max. Thank you for joining us. So you make a case that Peter Thiel, good morning, is essentially the one who wrote the playbook for Silicon Valley tech behemoths like Facebook, Airbnb, Web 2.0. Can you explain what that underlying philosophy is?
Yeah, absolutely. So, and you left out, one important early pioneer in digital currency as well. So Thiel, the playbook that Thiel created is the kind of disruption playbook. We talk about sometimes a cult of disruption in Silicon Valley, this idea that startups should grow really big, really quickly, and should be kind of willing to bend the rules or even break the rules at times, if it, when things call for it. Thiel's somebody who thinks that, kind of like the institutional consensus, any consensus, is generally wrong. And he's, kind of always looking to kind of poke that and in the world of business, seed startups or start companies that can potentially overturn that consensus. And he sees that both as a way to make money, but also as an ideological force as well. And for Thiel, you hinted at this, ideology and business are very closely connected.
Interesting. And you mentioned an early funder of cryptocurrency. He gave a grant to Vitalik Buterin, who is the creator of Ethereum, of course. But taking a look at Facebook, or Meta, as they call themselves now, they're building a metaverse, shifting from Web 2 to Web 3.0. Now, on the one hand, a lot of Thiel's libertarianism, stick it to the man attitude, is at the heart of crypto and Web 3. But on the other hand, Web 3 is a backlash against big tech centralized companies. How do you think the transition from Web 2 to Web 3.0 will go for incumbent tech giants like Meta, like Facebook?
Well, so I think this is telling because, of course, as you say, Thiel he's on the board of Meta. It's very hard to remember to call it Meta, but he's on the board of Meta. He is somebody who I think, you can tell a story where Silicon Valley as it exists today, these gigantic, monopolistic, sort of all powerful companies, running our lives and potentially like controlling our minds. Like Thiel has created that in a really important way, and he's still a part of that. But he's also turned critic. He has for years and years been talking about kind of the sort of monopolistic potential of tech, and he's even kind of come close to criticizing Facebook. So I think he's somebody. I think Thiel's somebody who's sort of always been kind of at the forefront, and he has been sort of pushing in this direction for years and years and years. Of course, he also has made a lot of money from, Web 2. So he's kind of got bets on both sides of this. And I don't think you should look at Thiel as somebody who is, kind of a stand-in for big tech. He's somebody who helped build big tech and who's now betting on this kind of next generation of technology companies, these distributed tech companies. And he's even started to talk about Facebook as kind of as a decentralizing force, which I think a lot of people would find maybe self-interested. He's just on the board. He's trying to kind of help the company adapt or whatever. But it does show kind of like where he is ideologically, and where even people who are kind of really bought in to kind of Silicon Valley as it exists today, they definitely see this as a new and emerging trend.
So how does Peter Thiel look at the likes of Elon Musk and Max Levchin? How are they getting along? Are they getting along? How does he get along with Mark Zuckerberg? I mean, does he admire them? Is he jealous of them? Like, what's really going on there?
All right, well, let's take them. I think those are a bunch of really interesting questions. So Thiel and Mark Zuckerberg have a close relationship. I mean, he's one of the Thiel, I think, is one of the only people who Mark Zuckerberg really listens to. He's the longest serving outside board member. He's somebody Zuckerberg respects tremendously. He has an enormous influence on Facebook. If you want to get in Mark Zuckerberg's ear, Peter Thiel is a good way to do it. Thiel and Elon Musk now have a much more contentious relationship, and a really interesting one. They were both founders. They were founders of two different companies that merged to create PayPal. So they're sort of co-founders of PayPal. And early on, Musk was the CEO of PayPal, and Thiel was kind of like the junior partner. Musk went on a honeymoon, in 2000 or 2001, and when he came back, Thiel had done a coup and had replaced him as CEO. And that coup and that kind of betrayal has sort of always hung over their relationship. And there is kind of this sort of frenemy quality to them where they invest in one another's companies. I think they have a mutual respect, but they have some very different ideas. Thiel is much more interested in, libertarian politics and in ideology. And Musk, of course, is sort of all in on these big technology bets, one of which Thiel's an investor in SpaceX, but Thiel, did not, crucially invest in Tesla Motors, Elon Musk's electric car company. And part of the reason for that, as I write in the book, is that, they have a disagreement on climate change. Musk is somebody who, really cares about climate change, as we know, and Thiel's somebody who sees the, climate consensus as being, a product of like the liberal, elites or whatever. He's kind of a climate denier. And so that was, that was a source of tension for them as well.
So anything about his early years, Peter Thiel's early years, does that tell us anything about Peter Thiel, the investor now? I mean, it seems like he had a lot of self-identity issues in college, but what does that translate to now, many years later as he's throwing billions around here and there?
Well, let me bring up a couple of things. I mean, and so Thiel's personal story is really, really fascinating. Like he, born in Germany, bounced around a lot as a kid, had no real technical expertise. There's sort of no reason for him to assume this like incredible influence in the tech industry. No reason for him to be, the most powerful venture capitalist in Silicon Valley, except that he is, very good at, kind of communicating and sort of marketing himself, and also very good at kind of seeing the future. So it's this kind of amazing, almost quintessentially American story where he, is kind of this self-created person who takes over the tech industry and more recently has kind of had a huge influence in Republican politics. The other thing is, and you kind of alluded to this, he had a tough childhood. He was bullied as a kid. He was kind of an outsider, and in particular, an outsider politically. He felt like he was this lone conservative in a sea of liberals, and that shaped his identity. In terms of his ideology, it's like part of the reason I think he, became a Donald Trump supporter, and he's a, major conservative political figure now. But it also shaped his kind of conception of investing, where he sort of sees, as I alluded to earlier, he's somebody who sees the world in terms of, these trends that everybody's bought into, and he's going to take the other side of the bet, and that's something that if you're a venture capitalist, it can work really nicely, because venture capital is all about placing these high leverage, high risk bets that can pay off enormously. And we've seen that over and over in Thiel's career. Where he was the first outside investor in Facebook. He started Palantir. And it's gone on, and now we're seeing he's making these bets, of course, in the world of crypto and so on. So there's that. And then one other thing I want to bring up, and I kind of hinted at this. I mean, you mentioned Thiel's connection to Ethereum, but really it goes way further back than that, because PayPal. We think of PayPal. Thiel co-founded PayPal. We think of it as this kind of clever way to pay for things on eBay, right? It's like, I bought something. It's like totally kind of mundane technology that is like kind of a big part of how the internet works today. But that's crucially not how Thiel saw it when he started it, and not how he talked about it. He talked about it in almost the exact same way that people talk about Bitcoin. He talked about how this was digital money, and how once you had a value stored in digital wallets, it was going to become very, very hard for governments to control. And that was part of, the early ideology of PayPal, as part of like why they were doing it. And I think it had an influence on, on everybody else in the digital money space. And when you look at the kind of, crypto, of course, has become much more diverse in recent years, and you not everybody is a crazy libertarian, but of course that libertarian streak, this idea of crypto as a way to kind of separate oneself from the federal government or from governments around the world, that's something that Thiel and his co-founders, including Musk and others, helped pioneer.
Do you think, though, that he would be for decentralization? Because you mentioned Facebook, and a lot of folks in crypto are very skeptical of Facebook and their efforts to design a metaverse and their intent to, enter Web3 and the extent that they can create decentralization. A lot of people think that they can't, given their track record of taking everyone's data and using it to influence elections. Yeah. So, and just from your book, it sounds that like Peter Thiel is someone who is about the cult of personality and installing dictators, if you will, in these companies. So would he be for decentralization?
I mean, Thiel is interested in the ideas around decentralization. And I think he's legitimately, he's funding some of these technologies, but he's also interested in money and making money. And he's also interested in, in power and influence. And I think those goals are often at odds, right? He's a hedge fund manager. He's often on both sides of the bet. So we're seeing Peter Thiel make bets, on some of these decentralized technologies, but of course he still is a big part of these kind of centralizing technologies, and it's often very hard to know like where he stands. People probably remember earlier this year, Thiel made a comment about Bitcoin being a Chinese financial weapon, and that's something that and at the time I think that was really shocking to people who had seen him kind of as a thought leader in the crypto world. He's coming going out there and basically, inviting the U.S. to regulate the currency. And there were all these kind of theories, like, okay, like maybe he's like maybe this is some kind of play, which I don't think you should totally discount. He's a trader. You could totally imagine him, trying to either buy low or whatever. But I also think what he was doing there was trying to make a case for a certain kind of crypto regulation in the US, right? Like we've seen Mark Zuckerberg try to argue that the U.S. government should kind of go easy on Facebook because of TikTok, which is this Chinese competitor, and Zuckerberg sort of argued like if you crack down on Facebook, then TikTok will just take over, and then it'll be sort of counterproductive. And I think Thiel has at times tried to use the same kind of logic around crypto, where he sort of said, look, if we don't regulate this in a smart way, then other countries are going to take advantage of it, and the U.S. is going to fall behind. So I definitely think he is an ally ideologically to crypto folks, especially those of the kind of like libertarian disposition. But I also think people would be right to be skeptical because Facebook and these giant companies do not necessarily have an interest in promoting these technologies. I don't think Facebook or Twitter or Google wants decentralization. I mean, what they want is to own this trend, right? That's kind of like what they do. And that is very much, the Peter Thiel playbook. When you read 0 to 1, his book, right, it talks about monopoly as being basically the endpoint of business. Most of us think of monopoly as being sort of antithetical to capitalism. And Thiel kind of argued that basically these tech companies should get as big and as fast, as quickly as possible, specifically taking advantage of network effects. And of course, that is a great way to centralize power. It's a great way to make money if you happen to own one of these companies, but it can have lots of negative consequences. And of course, it's not great for anybody who's bought into Web3. Mm-hmm. So there's a tension. So I think it's worth approaching him with skepticism, but also paying attention.
He's an enigmatic character. You cover him meticulously in your book, The Contrarian. Thank you so much, Max, for joining us. Max Chafkin, everyone. All right, coming up, where to buy the hottest virtual real estate next year, and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wayne.
I'm Nicholas Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching.
And you're watching CoinDesk TV.
Welcome back. The virtual real estate market will explode in 2022, but it won't happen on Ethereum, according to our next guest. Joining us is Irina Karagyaur, head of Metaverse Growth at Unique Network, an NFT platform on Polkadot. Welcome, Irina. So the most popular metaverse projects out there today are built on Ethereum, such as Decentraland, Sandbox, Axie Infinity, but you believe virtual real estate will see the most growth on other blockchains next year. Why?
Good morning, Christina Lawrence. I believe that Ethereum has its limitations. We did see an explosion of NFTs and metaverse concepts on the Ethereum blockchain, but so much more has happened in the past sort of 8 months. We now have Polkadot going live on December 18th. We have Tezos, Solana, Kusama, Cardano, all other chains, and a lot of startups entering the metaverse and understanding the value of building Web3, of building virtual worlds, and getting into NFT space, because what we're seeing now is really the organizational infrastructure being built and communities being gathered around it. And we need advanced tools, we need scalability to blockchains, we need other features to enable real growth of other application and metaverses, like open metaverse, because what we tend to talk about now a lot is sort of this superficial level, the level that the end user sees first, just the virtual world, the user interface, the 3D space. But the metaverse is much more than that.
And why do you see people buying virtual real estate versus actual real estate in the physical world?
It is already happening in a way. And to me, the metaverse is sort of a sandbox and an environment where we can experiment and test concepts that may not necessarily work right now in the real world, because real estate is very conservative industry, and buying property may be very expensive or often unaffordable, or it's just not accessible by young people, by millennials, and now these younger generations are entering the space of real estate and realizing what they can afford, what they cannot, and how to actually approach this this industry, right? Because everybody wants to grow their wealth, everybody wants to own a piece of land. And it does look to me that we will first face younger generations purchasing a piece of virtual land and testing how it feels to own a land, even if it's virtual, in the metaverse, and then apply this concept to the real life. Of course, it will take us some time in developments, in regulations, in tech integrations, to get to the point when we will be able to tokenize real property through, let's say, non-fungible tokens, as they represent unique digital asset on a blockchain, and then move these rights to on the real property. So, we can certify,
Irina, one example one thing that you said is that you see growth happening outside of Ethereum, and people cite the expenses that are involved with doing anything on the Ethereum blockchain. However, if you're going to liken it to real estate in the real world, in the physical world, you look at New York City, a city where prices kept going up and up until just recently when it was taken over by a complete buffoon for mayor. You look at high taxes equivalent to high gas fees. You look at the cost of owning real estate just seemed to be impervious to certain declines in throughout the U.S. economy, at least in other cities. It still remained a very desirable location to buy into. So does it really matter that the Ethereum blockchain is expensive if everybody wants to buy into it anyway? Is that analogy of being very similar to physical real estate actually incredibly accurate when it comes to the Ethereum blockchain?
Well, of course, we all want to live in an exclusive area, right, and have access to some perks and bonuses. And now metaverses like Sandbox or Decentraland or Roblox, because of the activities they were having, because of the users they were attracting, it is what it is right now. It's expensive, but it's attractive. But the truth is that we haven't witnessed other use cases. We haven't seen other metaverses with other opportunities because it's just beginning to emerge. We will see many more on, say, substrate chains where gas fees are low. And next year, at the beginning, we'll see many more projects that are being built sort of in disguise for several years, and they will start attracting celebrities. And Snoop Dogg is already, buying real estate, and many more celebrities will enter the space, and many more brands. So there will be disruption, and there will be stage 2 when we will understand that Ethereum is sort of a vertical infrastructure where everybody wants to live on the top floor, but then you have an amazing green land outside of that building, and maybe you want to purchase a villa somewhere outside there and have your own exclusive party. Why not? Why do we have to limit ourselves to just one infrastructure if there is a choice, a real one, available one? Because so far it wasn't available. It's just simple as that. It was not. There was no access to that market.
Other blockchains out there. All right, Irina, thank you so much for joining us. That was Irina Karagyaur at Unique Network. Food, travel, art, and music, NFTs, the metaverse, and more. It's all part of Culture Week at CoinDesk, and you can see the entire collection at CoinDesk.com/culture Week. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. All right, so congressional candidates are getting into crypto, and most surprisingly, Brad Sherman, who is notoriously known for wanting to ban cryptocurrencies, seems to be embracing a meme coin.
Good morning. We're seeing a lot of interest from congressional candidates around crypto now, and there's a host that are suggesting policy proposals, dropping NFTs, discussing this issue as part of their campaigns. And given the 2022 election is a mere 11 months away, it seems time is now for a lot of individuals who want to gain a seat in the House of Representatives to stake their positions out. And I think that's what we're seeing. As for Representative Sherman, yesterday he tweeted that he is grateful to the Mongoose Coin community for donating to the Kentucky Relief Fund. And I think that's really just a recognition that Kentucky faced a horrifying tragedy when tornadoes came through and devastated communities. And, any effort to provide relief, whether that's Mongoose Coin or, some other charitable effort, is a good thing. It's something that'll help. So I think it's really just, what Representative Sherman here is doing. And I'm sure he's enjoying the joke that this entire crypto coin kind of grew out of a joke he made during a congressional hearing.
Oh, certainly a Christmas miracle. Specifically, there was one congressional candidate who dropped a couple of thousand NFTs. Is that what's that about?
Yeah, so another would-be California representative, Sheena Karuni, in the California congressional race, is dropping 2022 NFTs to represent the year. These are actually coming out later this month, so they're not out yet, but they're being launched on Solana, and they're just part of her campaign to try and engage the crypto community.
All right, Nick. Thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. All right, and that's it for First Mover. Thank you, Lawrence Lewitton. I'm your host, Christine Lee, and I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.